We're going live. Welcome to Biztech's Asian Midday Market Watch. Our guest today is David Koh, founder of the Smart Investor, just coming back to us out of Singapore. David, great to have you on the show.
Yeah, gee, it's great to be back home. I think there's a song in there somewhere. Yeah, it's certainly good to be back home.
Well, I hope you enjoyed your holidays across Christmas and Chinese New Year away from Singapore.
Well, it was an eye-opener just to see how other economies try and cope with COVID. And maybe the realization now is that now that most people are vaccinated and they have a better understanding of the virus, that it is time to relax a little. Whether we should go as far as the UK, where they relax totally or not, is a different matter. But certainly people are a little bit more relaxed. And just to share with you a story, my daughter, who was double vaccinated, and she was about to go and have a booster shot, but she didn't have time to go and do it. Well, she contracted COVID-19, and she was isolating for 5 days. And she said, quite frankly, it was nothing worse than a cold. And then after 5 days, she was tested negative, and she came out and she said, well, it was just an experience that maybe people are worrying too much about. But now that she's caught it, I don't think she's likely to catch it again. But not being a doctor, I don't know if that's true.
Now, before we come back to you and get your insights, let's take a look and see how markets have been performing. And we're going to start with the crypto markets. Bitcoin is at 43,526.7. It's down 1.9%. Ethereum is at 3,090.24. It's down 2.27%. Now, across regional markets, we've got the STI Straits Times Index, which is at 3,406.35. It's up 0.14%. Bursa Malaysia on the KLSE is at 1,546.14. It's up 1.05%. Shanghai is at 3,467.61. It's up 0.43%. The ASX All Ordinaries is at 7,560, up 0.95%. The Nikkei is at 27,602.5. It's up 1.17%. The Hang Seng is at 24,855. It's up 2.16%. Rounding up the numbers, we've got the Kospi, which is at 2,769. It's up 0.84%. David, what's your view on how markets have performed this morning?
Well, it is quite telling that the Asian markets are doing quite well at the moment. And maybe it is a sign that if you have a look at many of the companies that are listed in Asia, and I'm not trying to badmouth Asia in any way, but there aren't that many tech companies. There aren't many unprofitable tech companies in those indices. So maybe people are coming to the realization that perhaps the party is slightly over now for speculation, that the party is over for those companies that aren't generating a profit, aren't really generating cash. And it was great whilst interest rates were virtually zero, because you weren't really losing anything. You take money out of the bank and you put them into those non-profitable tech companies. What have you lost? Nothing really, because you're not losing that chance to earn some interest. But now that there is talk that interest rates are going to be going a little bit higher, then people are thinking, well, maybe I don't really want to sort of take that chance anymore. And another telling thing really is cryptocurrencies. You look at Bitcoins. At one time, it was really sort of nudging 90,000, and it was likely to go up to as high as 100,000. I heard some people talking about 500,000 for each Bitcoin, but we're a long way from that now. We're back down to about 60,000, and the outlook for Bitcoin really is, can it deliver? If it can deliver, then maybe there is some value in it, but if it can't deliver, then I don't think even 60,000 is going to hold for long.
So David, what's your view on the tremendous volatility that we've been experiencing in markets this year?
You see, I'm not really that surprised by the amount of volatility. Volatility is a sign that there are people out there who aren't entirely sure about what they were invested in the first place. And so you get this volatility and you listen to all that noise in the market, and then you start to get cold feet and then you jump out. But as far as long-term investors are concerned, people who understand why they are buying a certain stock, what they are buying is very important, because unless you know what you are buying and why you are buying it, then you will unfortunately be like a toothpick in a tumbler. You'd just be swirling around all the time, going from one side to the other. But for those people who have a focus in mind, and in my case, it is cash flow, it is the dividends that these companies can pay. And as long as I know that those dividends are going to be solid, those dividends are going to be delivered, I'm not too worried about volatility. In fact, I quite embrace volatility, and I quite like the idea that some of those stocks that were vastly overbid at one time are now becoming a little bit cheaper, and I can use the cash that I have available to buy those dividends at a much more attractive price.
Okay, so I want to ask you something related to what you just said in terms of you're an income investor, you're looking at dividends, you're looking at steady income streams. REITs provide that. Suddenly, REITs have fallen out of favor. So what's your view on this? Is this time to go bargain hunting?
Well, I think so. And what I will say to you, Brian, is that a lot of people were jumping into REITs and perhaps overbidding for the prices of some of those REITs, which made it very difficult for me, in my case, to go and buy the quantities that I wanted, because everybody was jumping in there trying to buy the same REITs. Now, of course, when they have an opportunity to not stay in REITs, but to perhaps go into a savings account, at some point, those savings accounts' interest rates will start to rise. And so they're saying, why do I want to buy REITs when I can actually sort of put my money in the bank and perhaps earn 2% or something? And I quite understand that. And I say to those people, if you don't want to actually be in the market, then by all means, go somewhere else. But be very mindful of the fact that if you are putting your money in the bank and you are earning, say, somewhere between 1% and 2%, and inflation is actually higher than that, you are going to be losing money. I mean, money in the bank is risk-free, but it is not damage-free. It is a totally different thing altogether. It is damaged by inflation. So for people like me who are looking at companies that not only can pay a dividend, but can pay rising dividends, then of course, I will continue to go into and continue to buy REITs, because they not only have the ability to increase the distributions, but they also pay quite reasonable distributions as it stands at the moment. So yeah, by all means. I mean, if you don't want to be in REITs, thank you very much. Get out of it and let me buy them, because that is what I'm in the market for.
Now, David, you hit the nail on the head when you talked about inflation, which is the concern of markets now across the world. Investors are worried about inflation. What's your take on this inflation narrative, which has moved from transitory to now multiple expectations of multiple rate hikes in the US this year?
Well, I mean, we'll be hearing later on about the inflation rate in the US, and people are now talking about an annualized rate of something like 7%. I mean, that is horrifying. I mean, 7% is something that we haven't seen for the last, 40 years in the US. But what really surprises me, Brian, is why it has taken so long for inflation to manifest itself. I mean, I would have thought that inflation after the year 2000, which is 20 years ago, should have been a lot stronger than it is. I also thought that, back in 2008, after the great financial crisis, we would be seeing a lot more inflation than we had, but we didn't. But this time, perhaps, with the virus coming along and also disrupting things like supply chains, what is coming home to roost is the fact that the central banks have pumped a lot of money into the global economy. And that money previously was going into things like buildings. It was going into assets. It was going into the stock market. So maybe now some of that money has been redistributed and gone into the pockets of people. And those people are now going out and buying things and pushing up not just asset prices, but consumer prices. And that is the kind of inflation that we're seeing right now. So personally, I'm not that surprised, but I think things will even themselves out eventually, because the cure for high inflation, Brian, is high inflation. Because when there is inflationary pressures out there, there'll be lots of companies hoping to capture those higher prices and supply goods, and then that will actually sort of bring down inflation. But it's not going to happen overnight. It's going to take a while for that to occur.
David, as always, thank you very much for taking your time to come on the show.
Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our various platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.